Good afternoon, everyone. We're going to go into our last series on how to scale for max profits. This is part three, stops and targets. Okay. So we trade a system called price flow analysis. It's nothing more than the flow of price from one chart to another and using support and resistance to get into a trade. That's all it is. It's not anything complicated, anything rocket science, anything like that. I don't want you to see it as though it's something that you can't do. Anybody can do this. It just takes a trained eye to see it over and over again. So we're going to go over how to scale. We talked about this as a group about this trade that happened earlier today. And what you have to know is price doesn't do anything but go back and forth between the same price over and over again until it breaks out and does the same thing over and over again. And it does that ad nauseum all the time. So let's talk about this trade that we talked about earlier today about, and we're going to talk about the stops and the targets along the way. That was a trade right here that we enter in on price action. Okay. This trade right here that you enter in on price action. Our actual entry would have been somewhere above there, like right there. And this would have been our stop down here. So let's look and see what that looks like. So we would have been entering that trade about 19 and a quarter with a stop of about 11 and a quarter. So you're talking about 8 points of risk, right? So I don't suggest that you have a fixed target. I suggest that you have a variable target. And let me explain to you what I mean by that. If you have a fixed target, as soon as it hits this level, you're going to be out, right? That's what it means. Okay, so if I'm going 1-to-1, once it go 8 points, I'm out. If I'm going 2-to-1, once it goes 16 points, cool, I'm out. If it goes 3-to-1 on this particular trade, once it goes to 24 points, I'm out. So on and so forth. One more, once it goes 4 points at 32 points, I'm out. I'm going to give you a different way to look at that. Let's say you have a trade that has a stop at 8 points, right? We know for a fact that price is going to go back up in this area and test. The reason why it's going to go back, and I'm going to show you the area that I'm talking about here. We know for a fact price is going to come back up in here and test. Okay. We know that for a fact. So if we get in the trade at 19, we know that a fixed profit target could be from 19 and a quarter to, let's just say 47 and a quarter. Okay. So we're risking 8 points because our stop is 11 and a quarter. All right. And let's look and see what that math looks like. So you have 47 and a quarter minus 19 and a quarter. That's 28 points. Divided by your 8 points of risk is a 3.5 profit target. Nothing wrong with having that as a profit target, but I'm going to teach you how to maximize this for monster gains, right? So you're talking about 28 points on one contract times $20 on the NQ is $560. We've talked about scaling into the trade. Once you know for a fact that you're right, like you know for a fact you're right when it pulls back here and it doesn't go down. So I might say, okay, cool. I'm gonna get in another one and I'm gonna show you how you do this. I'm gonna say I'm gonna get in another one here, right? Just a little bit higher. Then I'm waiting, right? And it shoots up to my profit target, right? So now I have two contracts on, one contract at 19 and a quarter, one contract on at 24 and a quarter. If you were really aggressive, you might have another contract on, might. at, and let's see what this price is. So you might have another contract on at, say, 40 and a quarter. And you know for a fact that you might, I'm gonna get all everything if it gets to 48, because that means I made a lot of money, right? So you're in at 19.25 plus again and again at 24.50. And then you're in again at 40.50. So your average price is literally 28.08, right? That's your average price. So your average price is 28.08, right? And you're in 3 contracts. Well, let me say it this way. Once it gets up here, I'd be watching, right? If it comes down here and then it shoots back up, I might not want to get in anymore, because at this particular point, right, I don't know if, again, the reason why we call that area is because we know that this is a congestion area from over here, right? So I'm like, all right, well, let me see what's going on. Let me see what's up. And then she comes back, she goes up here, right? She goes down, then she comes back up. If she comes back down through here, I'm not losing on the trade, right? So at this point, I might get out at 45, 43, right? 43 on that trade. So let's just say you're in 3 contracts at an average price of 28, right? And you get out at 43. That's 15 points times 3 contracts times $20 a contract. That's $900 on that trade. Not bad. Not a bad trade at all, right? Let's look and see where we might have had another one, right? And I'll show it to you. I think it's one at 12 o'clock. It is one at 12 o'clock, right? So we know for a fact, again, that this area, and I'll draw it for you. We know for a fact that this area here is a support area. We know that for a fact, right? But we also know, it's tough because it's right there near the last swing, last time we got out of the trade. That is true. But I also know that price is not breaking down lower, meaning that this low here, it never got there. It formed an equilibrium point here in this area. And let me draw it for you so you can see it. We know for a fact it got into an equilibrium area there, right? That's where price hit a lot. If you look across the chart, it's just a congestion area. I'm like, okay, cool. You get into the trade over here, and you say, I'm going to test it just to see, because if it pushes through, I'm good. So we're going to copy and move this drawing over here. And we're going to enter in a contract there, right? Then it pushes through. When it pushes through here, come down and test. Oh, I'm going to enter in another one. And then I'm like, okay, cool. So now I know what I'm doing here. So I'm like, okay, let's see what we got. So I want to see exactly what we got through this equilibrium area. It might get up in this area here. And I'll show you again. Copy and move. It might come up and get into this area right up in this area right here, because she hit that area a lot. Right, I didn't mean to put that right there, so let me move it where I need it to be. It hit that area a lot. right? If you just look straight across the chart, it hit that area a whole lot. Okay, all right, I know what I'm doing now. I know what I'm doing. So now I'm like, okay, I'm in again here. I'm figuring it's going to go up to that area. So I'm going to enter in another contract here. Because I'm feeling fairly confident that she's going to go up, right? So I enter in again there, and that's my 3 contracts. Today is a down day, so I don't want to be too gung-ho to the long side, but I want to give myself an opportunity to make money. It goes here. I will be exiting this trade at this point, right? I'll copy and move this so you can see it. I'd be exiting that trade right about there, right? So now let's see what we would have made on that trade. That trade there has an entry of, let's just say 44, 54, and 60. 44 plus 64 plus 60 divided by 3. And I would have been exiting out of all of my trades at about 64. So I have an average price of 56 minus my 64. Give me 8 points times 3 contracts times $20. That's a $480 trade. And I gave the trade as much room as I possibly could to run. So now, okay, cool. That's that. So now we're going to see if we get it one more. I don't know if you do or not. And let's look. Came back down into this area. And I'm like, ooh, that's tough. I don't know what I want to do here. Went up, came back down into an equilibrium zone. I was like, it's not really like how I'd like to see it. But then she went up and made this higher high right here. So now I have a trend. I have a higher high, higher low, and a higher high. And I'll draw it for you. So you have a higher high, higher low, higher high. Comes back down into this equilibrium area. Right there. You look straight across, you can see where price hit that a lot. So if it goes up right there, I'm like, okay, I want to take that one. I want to take that one a lot. So then, hold on, let me erase that. So then I'm entering in to my contracts. My first contract, let me show you what it is. You'll be entering in your first contract here. You'll be entering into your second contract here. Now, this is getting very interesting. This is my third trade. I'm up on 2 of my trades, about $1,500. So I'm willing to give this a little room to see if this thing's going to actually go up. Now, my next area going up, all I got to do is look straight across. And I see my next equilibrium area right about there. Right. So now at this point, again, since I know that for a fact, I'm going to wait. I'm going to get in. I might get in right here. And this is tough because it comes back down to this point, but the point held, right? So I might like, okay, cool. Now that I know that we're in the clear, I might enter it again here because I know it should go a little bit higher, right? So now I'm in my 4 contracts because it's in the clear, and I'm looking forward to get all the way up here potentially. Well, she didn't. I'm not entering any more contracts up here because I mean I'm kind of leveraged up right now, and it's in a downtrending day. So I'm like, and then I'm going to exit out of all of my trades, right? And I'll show it to you. Right about here, right? So now on these trades, you can be in at, let's just say 60. Let's say 73. Let's say 85. Let's say 80. Let's say 85. And then the other ones we're in at 89. Give us an average price of 76.75, and we're out of everything at 95. That's 18.25 points times 4 contracts times 20. That's $1,460. It never got up to my original target, which was here, right? It never got up there. But I'm not going to be playing around up in here because she did get up into a congestion area up in here. And that's where I would have been like, okay, cool, I'm getting out of the trade. That is stops and targets as you go along, ladies and gentlemen. That is stops and targets. I talked at length on it on the first trade. I didn't talk about it as much. I want to talk more about the targets as you were going up into that trade. And that is how you trade. That's it. If you learn to do this, you're going to make a lot of money trading. Just point blank, period. So with that said, I have my mentees on the line. I want to see if they have any questions and or comments about what we just did today on scaling, how to scale for max profits, part 3, stops and targets.
As I look at that, can y'all hear me okay?
And hear you fine.
Perfect. So as I look at that, that was very insightful. And I am to assume that I've paid attention at least to my larger time frames to make sure I was lined up the way I should be as well.
Right. See that's a class for a different day, but you would have had to know that this was a trade on a larger time frames. You want to take those trades.
Right. Just want to clarify.
Yeah. So yes, that is correct. Any more questions, comments?
Um, let's see here. Checking it out. So when you scaled in, um, when you scaled in, you used so that when you scaled in, that wasn't necessarily that wasn't a market structure, right? That was just a pullback, correct?
Well, some of them were market structures
Okay,
and some of them were one bar pullbacks. It was based on how strong it was moving up. But
correct.
majority of them were market structures. Like if you look here, all of these were market structures. This is one market structure. That's 2 market structures. This is 3 market structures. This right here didn't give you a market structure, and then it gave you a market structure to the upside, and then it pushed up.
Okay. So you only because I was under the impression that it needs to be like 3, like you see it's just like 2 bars going down.
Right. I
I was
see that
thinking,
in some. Yeah. I see that over here.
Yeah.
But over here, you have a market structure down. Over here, you have a market structure down. Over here, you have a market structure down. This last one was when the momentum really got to going because it bounced up off of that support area. It went up, came down, hit it. It didn't go up that time. It came down, stopped everybody out. This is what happened. Everybody had their stop right here. The reason why that trade went so far so fast is because everybody had their stop right here and they were trying to get out and then fuel the trade to the upside.
Okay. So you only need 2 R's to have market structure.
Yes.
Okay, cool. See, that's why I was thinking it was 3, but okay.
It's 3 bars, but it's 2 bars to actually make it. In order to have a market structure that I'm looking for, you have to have a lower low and a break of that lower low. That's 2 bars, but you have to have something to compare the first lower low to. That's where the third bar comes in. So yeah. Did I answer your question?
Yeah. Hold on. Okay. So you have to have a lower low? Like, okay, so that yeah, go ahead. I'm listening.
Yeah, so in order for it to be a market structure, this is a bearish engulfing bar. Bearish outside bar right here, where I'm pointing at.
Mm-hmm.
And then this right here breaks that low. So this is 2 bars. But you have to have something to compare it to, which you compared it to that green bar right there, if that green candlestick that formed right there. So you have a low, a lower low, and a break of that low, which creates the market structure.
Okay.
All right.
Oh, I got you.
You got it?
Yeah.
Okay. All right. Any more questions or comments before we call it on how to scale for max profits, part 3, stops and targets?
No, I don't have any either.
Did you say something, Carmen?
Yeah, I was just saying I don't have any questions. I actually do need to go back and watch the first 2 videos.
All right, cool. So that's what we got, ladies and gentlemen. We'll call it. That is the last part in this 3-part series, how to scale for max profits, part 3, stops and targets. See you guys on the other side. We're out.